So hello everyone. So I hope you've enjoyed your lunch. So this session is actually 20 questions on Fastmarkets pricing and methodology. We will try to do 20, but I think maybe we have to do with 10. Yeah? Okay, so Shui, you can have the clicker. So a little bit of background. So why do we have this session? Simply because we often see a lot of misconceptions and questions coming from market participants, and these questions generally tend to be around the same. So we wanted to take the opportunity to just clear up to just answer these questions in the public forum. Yeah, so with me is price reporter, Ms. Zheng Shui. So she's quite the expert in iron ore pricing, so obviously she's the best person to sit on the stage here, as she's doing it every day, and not just for the normal grade products like sinter fines, but she's also looking at pellets, lumps, and concentrates and whatnot. Yeah. Shui, anything you want to introduce yourself or just say a few words?
Just want to say hi to everyone. I'm Shui. I'm working in Fastmarkets as a steel-making raw material price reporter. So I'm very happy to answer some of the common questions that people have regarding Fastmarkets.
Yeah, so first question, this is also quite an interesting question. Who is the owner of Fastmarkets?
Yeah, so maybe let me just share. Fastmarkets has more than 150 years of history, and the history for some of our brands date back to 1865. We rebranded as Metal Bulletin in 1915. Our business remained largely unchanged for the first 135 years, but over the last 20 years, the change has been rapid and dramatic, starting with the shift from print to digital. And the change has accelerated over the past few years with our PRA strategy, which we focus on pricing. The Fastmarkets brand was unveiled in 2018, and back then we was a subsidiary of Euromoney. On 2022, a consortium funds managed by Astor and Epiris completed the acquisition of Euromoney. As part of this transaction, Fastmarkets become a standalone entity in 2023, backed by our investor, Astor. Astor is a global private equity firm. What remains unchanged is we continue to position ourselves as the most trusted PRA in the markets that we serve. Yep. So here are the commodities market that we serve, including agriculture, forest products, metals and mining, and battery raw materials.
Yeah, so what exactly is the Fastmarkets iron ore methodology? Because usually we get this question almost on a weekly or even a daily basis. What's your methodology? How do you come up with the prices? Why are your indices moving this way?
Yeah, so let me explain using a graphic. So the graphic on the right-hand side shows the process of our daily calculation for most of our iron ore indices. Firstly, we collect price data from market participants. Our data collection window is 24-hour period before 6 p.m. every day. And this data include data submitted under formal data submitter agreements. And we also conduct market survey and getting price information from trading platforms. The data type will be used in the indices include both transaction and non-transaction data. This data, according to data submitting source, are inputted into 3 tonnage-weighted sub-indices, namely producer, consumer, and trader, to remove potential bias. After inputting the data, we will normalize the data to base specification, forming a preliminary index. Data that are 4% higher or lower than the preliminary index will be automatically excluded, forming the final index. The final index is a straight average of sub-index value. Each sub-index carries a 33% weight in the final index.
Yeah, so why we do it this way is to remove any potential bias and make sure that the price adheres to the market as closely as possible.
Yes, and as I mentioned before, let me explain how we normalize our price. We will normalize price data of various products into the base specification of the index. Price are normalized to the index-based specification by applying coefficients derived from a regression analysis of the previous month's index data. The normalization will take 2 steps. As products are often sold on variable FE basis, the normalization first adjusts to the index specification based on the dollar per FE percentage value derived from the in-house regression analysis. And the remaining value differential after accounting for FE variation comprises various other chemicals, including like other chemical, physical, and soft factor parameters. So Brent serves as a single variable proxy for all of these underlying value factors and allows a complete normalization to be made in a single extra step. Brent coefficients are updated at the start of each month to reflect the ever-changing value relationship in the market. And let me just share some of the principles that Fastmarkets have. Fastmarkets indices have like 4 principles. We would like to ensure fair representation of our index. We separate sub-indices for producers, consumers, and traders. Each sub-index has same weight in the final index. So like I mentioned before, the final index is the straight average of 3 sub-indices, mathematically ensuring balance. And our next principle is we use statistically driven index model, our regression analysis based on robust historical data to calculate normalization coefficients. Our outlier filters in the index model can exclude outliers that are 4% away from the preliminary index level, ensuring index calculation not skewed by anomalous data. And thirdly, we emphasize on transparency. Deals traded on platforms are entered into all 3 sub-indices to ensuring that our index aligns closely with publicly visible transactions so that the index is predictable and transparent. Our index methodology structurally supports the highest quality, most transparent, and standardized spot trading practices. Last but not least, as a weighted average over a 24-hour pricing session, the index is not vulnerable to distortion by the influence of one-off price anomalies. By prioritizing the weighting of fixed price platform-based activity, our methodology limits the potential influence of futures market volatility in the calculation of indices and ensure the index remain reflective of the physical iron ore market.
So another common question, does Fastmarkets use only platform data, for example, Corex or Global Ore, in its iron ore price assessments?
Yeah, so although we prioritize the weighting of platform data because of its transparency nature, we do not only depend on platform data. Major players in the market have signed data submitter agreement with us. They will send transaction data to us. So we also collect price data via market survey conducted by reporters like myself. So we collect secondary market deals and also bids, offer, and indication of the tradable level. So non-platform deals will be assigned to sub-index based on which entity reported the deal. If both trader and consumer reported the deal, it will be used in both sub-index calculation, which upweights the significance of the data. We don't discriminate against secondary market deals. We can use them into calculation, but if we suspect it is not standard terms, payment, or any standard terms, payment, or any binding terms between the 2 counterparties, so the price of secondary market deals is distorting away from a standard and transparent primary deal price, we may apply judgment to discard it. And all the non-transaction data carry 30% tonnage in the tonnage-weighted average calculation. We are also reserved to apply judgment to discard if any assessment data is distorting away from the transparent deals?
Yeah, so because the volatility in the paper market is very apparent, it's also very common. Even sometimes where maybe like China is on a holiday. So another common question is, why is your pricing not in line with swap movements?
Yeah, so the aim of our indices is to reflect the tradable level of physical iron ore market. Therefore, we prioritize fixed price deals to limit the potential influence of future market volatility in the calculation. Full tonnage will be used in the calculation for fixed price transaction data. We will convert floating price trades to fixed price equivalents using the SGX iron ore derivative forward curve. Then the fixed price equivalent data is weighted at 50% of the deal's reported tonnage. And a minimum tonnage of 30 KT will be used in calculation for non-transaction data.
And how do you calculate the index on Chinese holidays?
This is quite a common question. We will still try to collect data during the Chinese holidays, but if during situation of very little liquidity, we have fallback procedures to carry over data from previous days. So in the event that in a particular pricing session, the data set collected is not considered suitably robust, such as there being too few data points for the calculation of an index, Fastmarkets will implement the fallback procedure until a suitable number of data points is reached to calculate the index. So we will consider to carry over transaction data from other sub-indices in the same calculation period first, followed by non-transaction data. If the data set is still not sufficient, we can consider to carry over transaction data and non-transaction data from previous calculation. Lastly, if really no price data can be collected at all, the index price will be carried over.
So are all your indices also IOSCO compliant? So IOSCO is of course the international body governing securities. So are all our indices IOSCO compliant?
Yes, IOSCO accreditation is a process. We are a large PRA with many benchmarks, so have prioritized the most significant first. Like our 65, 62, 62LA indices have been audited. All other indices are aligned to the same procedure and will go through the process in due course. So let me share with you what's the significance of IOSCO. IOSCO is useful to ensure a certain level of practice among PRAs so that it can improve industry trust in benchmarks. But IOSCO doesn't really judge the quality or robustness of a methodology. This could be seen as a good thing for now because it leaves rooms for differences in PRA methodologies, which is also good for choice and competition.
Yeah, maybe I can just add on here. Yeah, the Fastmarkets iron ore methodology is always alive. It is not fixed, and we are always seeking improvements to the methodology. So every year we have an annual open methodology consultation. And if you do have any opinions or anything that you want to share, please do send across your comments or feedback to us. Yeah, so the next question, how do you price the 67.5% FE iron ore pellet feed index?
Yes, so we have just launched this last year, and I believe many of you here are interested in how we price 67.5 index. There was a common misunderstanding that high-grade iron ore concentrates and pellet feeds are usually priced by adding FE adjustment over a 65% FE fines index. However, after more than 10 years of tracking on iron ore concentrates and pellet feeds market in our previous 66% FE concentrates index, which was amended to 65% FE concentrates index in February last year, we find concentrate products are usually traded with an independent premium or discount on top of MB65 fines index with FE adjustments. The purple line in the chart showing the result of this formula. The premium or the discount level is constantly changing, and it is negotiated between the spot buyer and spot seller for each trade. The additional premium level is showing the value of pellet feed products in the spot market. And let me share some interesting data for our pellet feed index. Here is the specification of Fastmarkets 67.5% Fe pellet feed index. Pellet feed quality within this requirement could be used as a data in our daily calculation. From past 1 year, we observed 10 major brands traded in the spot market from Chile, Brazil, Peru, Sweden, and so on. The pie chart here shows a data breakdown by different pellet feed brands used in the calculation of the 67.5% Fe pellet feed premium index over March last year to March this year. As I mentioned earlier, when different brands are all used in one index calculation, prices will be normalized to reflect the base quality of the index. Please do note that this percentage breakdown is not fixed as a rule. It will change over time depending on the liquidity and visibility of different pellet feed brands in the spot market. In the future, if there's new pellet feed products start operation and it's traded in the spot market, its quality is within the index requirement, it can also be used in the calculation of the index. And I would also like to share that this chart shows the data points we use in pellet feed index calculation per month. The data points include deals, offer, bids, and market indications. We believe that the spot market of pellet feed products will take its time to develop further, and Fastmarkets is ready to support the pricing mechanism to develop and to witness its growth.
Yeah, so we are observing the pellet feed markets very closely. It is an extremely interesting and fascinating market to develop, especially if you're into the pellet and DRI supply chain, as well as green steel or even green iron ore premiums. So we are working on the pellet feed indices further with a view to refine them and make sure there's even more granular data to go by so that we can feed the industry needs in the future. Yeah, so the next question, how is the Fastmarkets Magnetite-hematite price differential produced?
Yeah, so Fastmarkets launched a price differential index in January this year, reflecting the average premium difference between magnetite and hematite materials in the 67.5% Fe pellet feed index. We are using a simple two-step brand average method to calculate magnetite and hematite premium differential. Firstly, we calculate the average premium of each magnetite brand. Then we calculate the average premium of all magnetite brands, as shown in the graph on the right. This is to eliminate the impact of price of a single brand skewing the magnetite average premium. For hematite average premium will just be the average premium of hematite brand, which currently only Minas Rio products are in our index. So, and we will getting the premium differential by subtracting hematite average premium from magnetite average premium. We do not use tonnage-weighted methods because it could skew the data if we have more data points from a certain brand. So our internal testing also showed that a tonnage-weighted method would have more volatility, while the differential calculated from the two-step simple brand average is more in line with our pellet feed premium index.
Yeah, maybe that sounds a little bit complex. Even I have to look at it closely. So if you are interested, please do reach out to us. So the very interesting thing about magnetite-hematite pellet feed differential is I feel that it is a very good tracker, a very good indicator of pellet feed market trends. Not just on hematite, magnetite, but also the narrower the spread generally tends to indicate how the steel market, how the iron ore markets are doing. Yeah. So that's actually one of my favorite prices to look at. I look at it every day, and it's giving me a very good idea of how the supply chain is moving now. So next question, what has been the impact of recent recovery in Chinese steel market on iron ore pricing.
Yeah, so Fastmarkets seaborne iron ore fines index were in a downward trend in Q1 2024. This is because weak steel demand, especially the rebar demand, due to weak performance in China's downstream property and infrastructure sectors, have weighed on the iron ore prices. And steel prices were kept by high steel inventories in China. And also poor steelmaking profits has limited the incentive to increase production and limit the buying interest for iron ore. And iron ore inventory were also accumulating at the Chinese process market. But in April, the start of the second quarter this year, iron ore prices pick up due to the recovery of steel demand in China. Hot metal production has rebounded, and despite the increase in production, steel inventories started to fall. The fall of raw materials costs in Q1 also improved steelmaking profits, further supporting some mills to resume production and increase the demand for iron ore. And market participants are also expect the Chinese governments to accelerate the implementation of special bonds, which are usually used to fund infrastructure projects. So we monitor very closely about China's steel demand and how it affects the iron ore market, and we will continue to do so for the rest of the year.
Yeah, so unfortunately we've come to the end of time now. We didn't reach, of course, the 10 or 20 questions. But please thank Ms. Zheng Shui for being on the stage with us. Please put your hands together for Ms. Zheng Shui.
Yeah, thank you, everyone.